Well, hello, friends, and happy Friday. It's the end of the week. Can you believe we are here now? And so it's great to be joining here with you. And we're going to cap up the week. There's a lot of stuff that's been going on. So, welcome to today's live level of conversation. Whether you're joining me live or joining me on replay, happy Friday. Let's dive right in.
Welcome to Level Up with Winnie Sun. Award-winning financial pro. Get ready. Level Up with Winnie Sun.
Well, hello, friends. Happy Friday. I'm Winnie Sun, your host and award winning financial pro, a Forbes contributor, and a CNBC council member and contributor as well. It is wonderful to be here to cap off the week. It's been a busy one. I mean, let me know how you're doing, how your week went. If you're looking forward to the weekend, all good things, right? Good vibes on Fridays. For those of you who are new, yes, we are streaming here live on a whole bunch of social media platforms. So jump in, introduce yourself, let me know how you're doing because we're going to go in hot. There's so much that I want to touch on today. But first off, the market hasn't closed yet. We've got less than 10 minutes left, but currently it's red across the board. The Dow is currently down 821 points. The S&P 500 is down 73. And the NASDAQ is down 266 as well. So not a great way to end the week, but it is what it is, right? So there's been a lot of news coming out of obviously Washington, D.C., maybe even your neck of the woods in your neighborhood. And of course, we've been hearing some things happening that are not so positive, and a lot of that's putting a lot of pressure in the financial markets. But I wanted to touch about today is there's been a whole bunch of financial news that I just want to make sure is on your radar. And there's one story that's been on many different publications, including CNBC, who I'm going to talk about today. Axios is also covering this, talking about inflation. Now, for both the CPI, the Consumer Price Index, and PPI, it rose just 0.1% in May, which actually suggests that, well, tariffs, the big ugly tariffs that we keep talking about, haven't completely sparked significant inflation just yet here in the United States. Now, why is that? Well, because some of it is because of a delayed reaction. In fact, many businesses stockpiled goods pre tariffs, and the impact on prices is still slowly unfolding and slowly coming to fruition as a lot of those inventories is being used up as consumers buy these things and warehouses get lower in stock. So tariff related hikes are actually showing in certain products already, like coffee, tobacco, canned fruit, appliances, similar to last patterns, but the consumer behavior holding prices is significantly down, with nearly 70% of US GDP is driven, of course, by consumer spending. Well, there already shows to be weak demand. And this is unfortunately limiting companies with their pricing power. So the stock market, although it's been rocky, I mean, days like this are not good. But overall, considering the threat of tariffs and inflation and everything else, actually remains relatively somewhat strong. So tax revenues we know are up, and right now we're waiting to hear more about this U.S. and China deal on rare earths, and hopefully everyone's hoping that this may actually ease supply chain fears. But if you are looking at other data such as bond yields and jobless trends, well, if you're paying attention to other reports, there's still a lot of red flags. We're definitely not out of the clear. So you can expect more volatility, and more nervousness translates to more movement in the financial markets, not always in a positive way. So there's another thing that is ongoing in the news, and that is the Federal Reserve. Now, you know that Washington, D.C. and the Federal Reserve, Federal Chairman Jerome Powell, well, let's just say they're definitely not the best of buddies. Well, the Federal Reserve is taking a wait and see approach and holding off on cutting interest rates until they feel that there's really clear data that that things will get better, and that well, interest rates likely are not going to be cut until things get significantly better. Now, that being said, President Trump is not happy about that. He does feel that, well, there should be an interest rate cut sooner rather than later. So now people are saying, well, what gives, right? Is there going to be continued inflation? Is there going to be now deflation concerns? Because now experts are warning that tariffs could actually trigger a slowdown or even deflation, and that could be really concerning. I mean, they're talking about like concerns like from the 1930s and things like that. But either way, I just thought I'd share that with you and let you know that we're not out of the clear yet, although it may not feel that bad, right? When you go and buy things, know that a lot of that's still trickling in. And so we might not feel the full result or impact of the tariffs that came after Liberation Day for a little bit to come still. So just be aware of that, especially if you're making buying decisions for you and your family. Now let's speak about some other trends. And this is something that I want to make sure that's on your radar. And I want to talk about quantum computing. Now, if you're thinking quantum computing, you're not even sure what that is, don't worry, you're not alone. But NVIDIA CEO is predicting that quantum computing will leap into real world. And this is being reported by CNBC. In fact, NVIDIA CEO Jensen Huang has declared that quantum computing is now at an inflection point. This is at we actually spoke at this recent conference at the GTC Paris. It was this developer, techie conference. But NVIDIA's CEO believes that we are nearing the stage where quantum systems can now be applied to real world challenges. Now, what does that mean? It means that areas such as science and even finance, medicine, well, now quantum computing could be making big impact. And unlike, regular bits and quantum bits or qubits even, they're saying that these can exist in multiple states simultaneously, enabling much more powerful computation. Because a lot of the challenges that we continue to face as humans are things that maybe we haven't been able to figure out yet. Maybe some of it was because of certain calculations and probability, and can we use what we know from here to there and putting it all together. So now NVIDIA is investing in hybrid quantum classical solutions through their new technology. And that's sort of that new next phase. So it isn't just artificial intelligence, but also quantum computing. And they're saying that his tone has really shifted from his past comments where he used to predict that practical quantum computing was maybe another 10, 15, 20 years away. But now he's saying that, I think we're getting close. In fact, he even praised Europe and what they're doing and the quantum startup scene in that part of the world. And those are some of the things that we're looking forward to, because with that computing technology, it could solve a lot of things that we're dealing with here and maybe even help us live longer and be healthier, which we know is a beautiful thing. All right, now let's continue on because I want to talk about rare earth. Now, we talked about rare earth just a moment ago. Now, why is this important and why are people saying that this could be a big crisis? Well, this is being reported by CNN Business, talking about the US auto industry, which they're really concerned about this rare earth deal. So, rare earth supply crisis is definitely brewing here in the United States. Now, a lot of industries are facing potential complete shutdowns due to China tightening exports of their rare earth elements that are essential to a lot of the electronics that we use and make here in the United States, even medical devices. So we know that in April, China implemented licensing requirements on their rare earth exports, which of course, slows down supply and putting a lot more pressure on the stockpiles that we currently have here in the United States, which experts are estimating is only enough for about 2 to 3 months. So definitely, I think we can agree that China is playing chess here and has in their possession something very, very valuable to us, which is rare earths. So the rare earths power is critical for vehicle components like cars, and not just electric vehicles, but parts such as, those sensors on seatbelts and even your windshield wipers. Those are all really important. And these are important parts that, as someone who drives a car, right, these are things that you expect to work. And if it doesn't work, you're going to have to replace a part. So now Ford Motors is actually reportedly paused operations at their Chicago Explorer plant altogether due to a shortage in magnets. And other automakers, such as General Motors and others, are also reportedly temporary export licenses as well. So this is a big issue, and I think this is something that needs to be continue to work out. And once again, another proof that you can't just alienate people who maybe are in competition with you, maybe you don't agree with, maybe you don't see eye to eye. You can't just alienate. You have to come to the table and make, have discussions and try to meet somewhere in the middle. This is yet another example of that. So that's what's happening with some of the long-term developing concerns about rare earths. And experts are really blaming sort of inaction, saying that this threat was actually foreseeable over a decade ago, but nothing was done. And there is definitely a chip shortage moment that we're experiencing here in the United States as well. So yes, it'd be great that we could have these minerals here in the United States and that we could have manufacturing here in the United States. That would be great to be self-sufficient, but it doesn't look like we're there just yet. And we're talking about shortages that need to be addressed in just a couple of months' time. So how and what that looks like, we don't know just yet, but we're certainly going to keep close eye, and I'll continue to let you know as we know as well. So thank you so much, Nicholas, to be on YouTube here and joining us. And CrossX Fighter, Joshua, thank you so much for being here. Always a treat to have you here. Thank you so much. All right, let's continue because I want to talk about some of the changes in the job market as well. All right, this is being reported by the Associated Press, AP News, talking about jobless claims here in the United States. Now, believe it or not, more Americans now are out of work. In fact, to the number of 248,000 Americans filed for unemployment benefits, in fact, just last week. Now, this is the highest it's been in over 8 months. And just a week before, it wasn't really changed. So it's not looking good. A lot of Americans are filing for unemployment. Now, though it is still within a historically healthy range of unemployment, but recent weekly claims are definitely creeping in. And this is giving sort of hinting at indications that rising layoffs and possible recession risks are upon us. A big part of that being, of course, tariffs. And businesses are reacting much more cautiously. Companies that are worried about if they can get the goods that they need, the costs that they need to build pricing so us as consumers will continue to purchase them, well, they might not be in that much of a hurry to hire new people. And also, most businesses, one of their highest costs is employee costs or workforce costs, right? So you're going to see probably more and more layoffs. Now, President Trump's evolving trade policies have contributed, of course, to some of these layoffs, and scaling back on 2025 financial forecasts for many of these companies also have caused companies to not only put hiring on pause, but also more companies have been doing LIFO, laying off employees, LIFO being last in, first out. I've heard that from many clients as well. If they were the last ones to be hired, first ones to be let go. Well, with inflation and unemployment both posing challenges right now, Fed Chairman Jerome Powell does note that tariffs are dampening consumer and business sentiment. And so because of that, we don't know what's going to happen just yet, but we do know that inflation still is somewhat of a concern. And now, of course, deflation talk has just started and entered the room as well, which is not a good thing as well. But to give you an idea, some of the layoffs that have happened already, this is going to come to a surprise. Because, we hear about layoffs at smaller companies. We hear about layoffs maybe in hospitality or certain industries that maybe, will feel the impact of tourism and whatnot. But now layoffs, and this should really be a red flag for all of us. Now there's been a lot of layoffs at companies such as this: Google, Starbucks, Meta, which is like Facebook, Microsoft. These are like major companies that traditionally are where you go to work for a company like Google. You would anticipate that you have a chance to be able to stay there for quite some time. And usually you feel like larger companies can weather these financial storms better. So to hear these types of companies doing layoffs, well, that should at least put something on your radar. We're also seeing that fewer and fewer Americans are now quitting their jobs. Job quitting, which usually is a sign of like workplace confidence, that's dropped significantly, which just shows that today, workers are definitely much more hesitant to risk changing their jobs, worried that they might not be able to get their next job. And for those of you who are tuning in and who are with me right now, have you seen this at your workplace? Are you concerned about your job? Like, are you doing something to prepare in case this happens to you? And if not, maybe, maybe something to think about because it is something that definitely we are seeing more and more of. It's definitely a rising trend in financial news today. Now let's continue, and I want to talk about what's happening at Apple with artificial intelligence. This is really interesting. This is coming from Engadget is reporting on this. Well, Apple is leaning hard on artificial intelligence. No surprise here. In fact, they're leaning hard on OpenAI. And in fact, the recent WWDC conference, Apple revealed just how deeply they have integrated ChatGPT into their brand new features, highlighting really their own artificial intelligence gaps. But using other people and leveraging obviously ChatGPT is something that I'm sure many of you use. Maybe you use on a day-to-day basis. Maybe you've been using it more than your traditional search engine. But from the Shortcuts app Xcode, OpenAI's models are now going to be baked into Apple's ecosystem, which they say often is a better alternative to Apple's own artificial intelligence systems. Apple has upgraded Siri, which that they teased last year, but still noticeably absent. So now their executives are saying that they still quite aren't ready and won't be ready until 2026 at the earliest. Now, although Apple lags, OpenAI, of course, has rolled out many, many advanced voice features. They're very consumer friendly, and they've even acquired um, Joni Eves, which he was the brains behind the design of many of the popular Apple products initially, like the iMac and the iPhone, and really modern, clean features. Well, OpenAI also acquired his hardware startup to build the next generation AI devices. So with OpenX Apple design talent like Evans Hinkie now also at OpenAI, it just seemed like a faster iteration of cycle. So Apple's traditional wait and perfect approach may backfire in the fast-moving AI race. But they're reporting that at least right now, it looks like Apple is leading into ChatGPT. So it'll be interesting to see what Apple's next products and how they will incorporate AI technology into it. And let's see. I mean, to me, it kind of makes sense, right? ChatGPT, if you've used different AI tools, is very quite seamless. It actually is very intuitive. And Apple devices, let's be honest, right? The Apple iPad and iPhone. For those of you who are using these devices, you probably enjoy how everything is quite intuitive as well. All right. And of course, let's continue because there's more coming out of technology up in Silicon Valley. And of course, we're talking about Google. Now, we hinted about this just a moment ago about layoffs and whatnot, but AP News, Associated Press, is of course announcing that Google is offering new buyouts to their employees in various areas such as search and ads and research and even engineering divisions. They're being offered, get this, a voluntary exit package as part of their cost cutting efforts. Now, if this sounds familiar to you of what a lot of what Doge did to the White House, yes, you are correct. Many of those employees were also offered a voluntary exit package to basically leave, and then we'll give you some money to go. Well, now Google is doing this as well. This is upon us because Google not only is facing a lot of challenges like everybody else with tariffs and inflation and everything, but also Google is awaiting a federal judge's decision on whether they need to dismantle parts of its business due to antitrust violations, which of course had been tied to their sort of monopoly or dominance in like the search engine business and advertising, digital advertising space. So a potential breakup of the company is actually on the table. In fact, the government is seeking to ban Google's 26 whopping billion-dollar annual payments to remain the default search engine. And so that could change. We'll see what happens to Chrome and other AI and advertising technology. But alongside these different buyouts, Google is also asking that remote employees that enjoyed working from home, maybe, or working for the coffee shop, um, near offices, that they are going to be shifting to hybrid work schedules because they want to boost in-person collaboration. They want to make sure that you're actually doing the job that you're supposed to be doing. They want to see you doing it, so they want you back in the office. So despite that, AR continues to pour a lot of their resources into AI to reshape, and of course, different types of technology and whatnot. But see, just want to give you an example of yet another company, very, very large company that traditionally many of us would typically think is doing very well, but they're having to make those difficult decisions. Because let's be honest, most companies, especially companies of that size, are able to attract high level, first of class talent. You usually don't want to lose that talent. And having to make changes and difficult cuts is never a positive thing. Now, speaking of never a positive thing, let's continue on because, well, maybe this is a positive. This could be a positive. I'll let you be the judge of that. I want to talk about robotaxis. Now, this is being reported by CNN. Now, I don't know if you've ever been in a robotaxi. That's where, there's a taxi, you get in, but there's not an actual person driving it. It's by electronic. This is actually very popular in Silicon Valley and other parts of the nation. Well, robotaxi is going to be a big thing because Elon Musk says Tesla's robotaxi service is going to start in literally like a week. June 22nd. It's going to start in Austin, Texas. And they said the date is kind of tentative, but now you might be able to get into a Tesla robotaxi. Now, despite many years of promises, Tesla, of course, is a little bit behind companies such as Waymo. If you've been in Northern California or Los Angeles, you've seen Waymo. Um, they already offer about 250,000 paid rides every single week, multiple cities. But now Tesla is coming in. Now, we do know that experts are saying that Tesla's real challenge isn't technology, it's competing with low wage Uber drivers, while still, of course, they have to pay for engineers and support staff. So they're saying Tesla's system is going to rely only on cameras. They're going to skip what they call LiDAR, which is used by rivals, which, of course, this is raising some concerns about how safe this will be, about detection and visibility, and is this going to be okay? But Tesla thinks that this is what they believe that this is going to work. Now, the National Highway Traffic Safety Administration, of course, is investigating Tesla's full self-driving FSD feature, but this is yet another offer when you need to, let's say, fly into an airport and you need to get to whatever destination. Now you have the choice of taxi, Uber, a traditional Uber with a driver, or Lyft with a driver, or now a self-driving driving taxi. So let me know what you think about this. Would you get in? Would you get in a robo taxi? That's what I hear for you. I see, Joshua. What do you think the next time you fly? Or let's say you don't even fly. Maybe you're in your neighborhood, right? And maybe your car is in the shop and you need to go and get your car. Would you prefer a human driving you, or would you prefer a robo taxi? And if it's a robo taxi, would you prefer one that uses just cameras, or the technology that other robo cars have? I'm curious to see how you feel about that, because that will show how much adoption that could be. I'm going to assume that, as long as we see really good safety numbers and, of course, reasonable costs, I imagine a lot of people would be willing to try that, at least for short drives and destinations. I think I would try it. I think I would definitely try it. My first time, I think I would be more comfortable going on surface streets. But if it works like it's supposed to work, that could be very, very compelling. Now let's continue. I want to talk about Social Security benefits, and then I'll probably wrap up because it's a Friday and you want to get on with your day, with your week. But Social Security, this is being reported by NPR. Now, in case you didn't know, all of a sudden, a lot of people have been, applying for Social Security claims. In fact, Social Security retirement claims have jumped a whopping 18% from January to May alone of this year. Actually, it's disrupted your typical seasonal trends. Many people who are 62 plus years old are now rushing to their Social Security office to claim benefits early because they're full on worried about the future policy changes under President Trump's administration, like raising the retirement age. So Social Security cites that baby boomer retirements, pension rule changes, and even like spousal benefit shifts. These are all things that are driving them to like be concerned about the political and economic front and what that means for them in terms of their finances. So they're all going to get their Social Security and starting their Social Security payments oftentimes early. So claiming early locks in smaller monthly benefits for life, and that yet still Americans don't seem to be so concerned about that. They just want to start it so they can have peace of mind that they're going to be getting their Social Security. But despite the 8% annual growth and benefits if you delay Social Security until age 70, well, public anxiety is big right now. And so, public anxiety over stability, even with President Trump saying that he won't touch Social Security, well, it seems like a lot of older Americans don't really believe that. Some actually feel that they just need to get it when they can. So, in fact, they've even seen that there's been a claim or a notable difference of people who earn more. So, high earners are actually filing early, very much so, even though that technically they should be financially stable since they have higher income. But actually, the studies show that that's not necessarily the case. Individuals are just fearful, more fearful than necessary, needing to take Social Security, but they're still only doing so. So changes to Social Security take place. Um, Usually, if there are changes, they usually take a few years to actually trickle down into the system. But nonetheless, claiming too early can also mean leaving thousands of dollars on the table long term for you. But the trend is we're seeing very clearly that people are navigating to receive Social Security early. So yeah, it's unfortunate. I would think that, you know, we wait and see, but I guess that's not the case. I would say this: if you're in that boat and you're considering taking your Social Security early rather than at regular full retirement age, or even postpone it for that extra bump, I definitely suggest you meet with a financial advisor before doing so, or at least an accountant to do the calculation to make sure that you're going to be okay long term. And with that, I've got a lot of other stories to cover, but it's been a very busy week already. So I think that's enough for today. And I'll definitely be back next week and share with you even more news that's coming in. And we're gonna talk a little bit about travel and some travel trends as well. Gotta make sure that's on your radar. And of course, for those of you who are here with me, thank you so much for making the time. Happy Friday to you. It is a treat to end the week with you. Do me a favor, hit that like and subscribe so you can stay updated on all the new latest content. And if you want to check out old episodes or previous episodes, you can always check out Winnie Sun, Level Up with Winnie Sun on NASDAQ, Amazon Fire, Hulu, and many other social media platforms. With that, thank you so much. Thank you so much for sharing the show. If you do, hit tag at Winnie Sun so I can see it. I appreciate you. Hope you have a better weekend, and I will see you again next week. Bye bye now.